Hey everybody, welcome. Happy to be here with you. Investing Master Series. James is out today, so I'm sitting in for him today. I'm joined in the chat by Scott Thompson for a little while, and then they're going to tag team, Scott and Ben, I think. So they'll pass the baton here, but I'm glad you're here. I see some familiar names in the chat. Appreciate each of you, and if you're here for the first time, we're glad you're here as well. Now, we're going to go through the markets. We'll look at individual stock trades. And, keep in mind that you can always, for additional financial content, you can follow us on X at Brent Moore CS, at Scott Thompson CS, at Ben Watson CS. Also, remember that Schwab does not recommend the use of technical analysis as a sole means of investment research. We'll be doing some technical analysis today. But there's other ways of doing things. And the information today is for general informational purposes only. It's not an individual recommendation or endorsement of any particular security chart pattern or investment strategy. The paper money applications. So we're talking about the Thinkorswim desktop software. We're not talking about Thinkorswim web today or anything else. We're talking about Thinkorswim software application. That is for educational purposes only. All investing involves risk, including loss of principal, and past performance is no guarantee of future results. And just remember, like with stop orders, we may use stop orders. Stop orders don't guarantee an execution at or near the stop price. All right, let's head on over, take a look at the markets, see what's going on. NASDAQ's actually up today. It's a little bouncer, so we're up 1.5% on the NASDAQ right now. And but that's not what's been going on. What's been going on is we've been getting lower highs. We've been trending down. And just for your purposes here on this, I have a 10-day exponential moving average on my chart. That's the red line. I have a 30-day simple moving average on the chart. That's the blue line. And when the 10-day exponential is below the 30-day simple, that's generally means there's some downward momentum going on there right now. Short-term downward trend, we'll say. It's emphasize on short-term there on that. But that's what we've been seeing on the NASDAQ. Today, we're up a little bit on that. So that's a little shift. Let's take another look at a different part of the market. Let's look at the S&P 500. S&P 500, not as bad, not as down as the NASDAQ. Well, today we're up a little bit. We're up about 0.5%. We're not up as much today. So, the general thing you see here is when we're looking at the NASDAQ, on bad days, it's going to be worse. On good days, it tends to be better. It tends to go up more. Today's happens to be a good day for that, and so it's going up more. But in general, you just see bigger swings on that. But the S&P, the SPX, we've kind of have this, a little bit more consolidation period area here on this. And so, well, let's go one step further. Let's go to the SPX equal weight. Okay, so clearly this is the best of the three. So when you think about the NASDAQ, it tends to be dominated by tech stocks. It's a lot of large, mega cap tech stocks. The S&P 500, to a lesser extent, yes, because it's market cap weighted like that. Here we take the equal weight, and you have this nice upward trend that we've seen on this. We're right above our 30-day moving average on that. So we kind of have we have an uneven market. We always have an uneven market to one extent or another, but it's really the case right now. Whenever you have a market, some things are going to be doing well or better than others, and some things are going to be doing worse than others. So often what we do is we try and target those areas that are doing better than others. All right? And so this is going to lead to kind of a top-down analysis. Before we get to that, though, let's just kind of talk about the big thing driving the market probably, Here's crude oil prices. Okay, this is a futures contract, but we're not talking about futures today. We're just talking about crude oil prices today. What's been going on? Well, we've just shifted. Here's our 10-day back above our 30-day moving average, showing that strength. Well, look, this is just totally news driven. I'm not going to rehash what's going on in the Gulf right now, except to say that, well, now the new news is, yeah, the Houthis may be more involved in shutting down more, in involving more of the neighbors there, so to speak, there. Well, that's kind of hurting the oil market. We're back up to about 85 bucks roughly on oil. That is certainly affecting the market there right now. Okay. So, so the market is unequal. Let's take a little bit of another look at this. Let me go here, and I'm just going to go to the sectors. So these are just S&P 500 sectors. There's 11 sectors in the S&P 500. And if we want, what we can do is we can always go and we can look at, say, relative strength. That's at the bottom of the chart here. And basically, with the relative strength, this is just a study you can add if you want. Go to the gear, not the gear, the flask, and you can add relative strength. And it's just telling how we're doing compared to the S&P 500. And in areas where the green line is going down, this is doing worse than the S&P 500. When it's sloping up, it's stronger than the S&P 500. Right now, I have oil right there. Well, let's look at these sectors. I can look at energy. Hey, what's energy been doing? Probably no surprise, given the discussion we just had on oil, that it's been outperforming the S&P 500 lately. Healthcare, more or less outperforming the S&P 500. Financials, outperforming the S&P 500. Let's go to the other end of the spectrum. IT, underperform. It's sloping down. It's underperforming. Materials, it's sloping down. It's underperforming. So why do we care? We care because if you are looking to invest or trade, a common approach, and the approach that I'm going to take today is what we call a top-down approach. And that is, we can look at the overall market. Okay? We can look at the overall market. But then that market, we can break that down into sectors. Okay? And then when we can break that sector down, if we want to, you could go like subsector or industry if you want. But ultimately, we come down to individual stocks. Okay? You come down to individual stocks. And so if you're looking to invest in stocks, hey, you can just like start off and look for the individual stock or something, but a very common approach that you'll see across our webcasts. And if you like our webcasts, they're on the Trader Talks channel. You just subscribe to it. Is we'll say, well, look, healthcare is doing well. Okay? We look at the sector, and therefore then we're going to look at healthcare stocks. Or energy is going well. Okay? Therefore we're going to do, energy stuff. And then, so we target those stocks based on that. So Sam in the chat said, healthcare, energy, financials. Those are the strongest right now. Yeah, let me get out of this for a sec. I have this sorted. This is just a list. This is a public list. This is a sector watch list. So this is from Cahill, Texas. All right. This is a public list. How do you get this list? Pull up a watch list. Okay. If you don't know how to get a watch list, click on the little plus sign in the bottom and it gives you a choice of gadgets. One of them is watch list. Go up here, go to public, and go to S&P 500 sector indices. Those two look pretty similar. They're both great watch lists, but the top one is this one. Now, if you just pull this up and you just have the symbol, these are the symbols you're going to see. And you're not going to know what's what, right? So add a description column. Easy peasy. add a description column, then you can see what they are. So with the description column, now what do I have here? I have a percentage change 1 month on here. That's a custom, that's a column you can add. Okay. You want to add the column? And let me click on the gear, click on customize. The second one on the list, percentage change since, and then you can change, you add it, you can change the time frame. I just have a month here. Okay. So over the last month, to Sam's point, healthcare, energy, financials have been the top ones. Then real estate, utilities, and down the list. IT's been at the bottom of the list, despite what today's doing. Generally, unless you're like a day trader or something, generally, we're less concerned about what is happening today as to what's been happening lately. Today's noise. One day's up, one day's down, whatnot. But if we look at the general strength, these are the three: energy, healthcare, financials. Okay, those are the top three, whatever. There we go. Okay, so that's that. That's kind of the second thing I wanted to point out to you. There's different ways to sort these. I'm using the 1 month. It's not, I'm not saying you have to use the 1 month. Another way people will do it is they'll go, let's see, do I have, they'll have like a relative strength, 10-day relative strength. This is a little bit shorter term. Let me just sort this. This is just financials here. And I can see individual stocks within the sector that are showing strength. That's one way to do it. There's a challenge with this, though. Many of you have noticed this, and that is this is a custom script, which is maybe great. And by the way, if you're interested in it, I put it in the description for this webcast. But once you have, a custom, and then once you change a list, let me just pull up healthcare. Then it can be slow. It can be slow to load. Okay. So that becomes a challenge on this. And if I wait long enough, this would all load up. But it can take a while. And in fact, it's going a little quicker now. This actually, I did this a little while ago, and it took probably 5 minutes, maybe not that long, but pretty close for that to load. All right. So that is, there's pros and cons to that. But what I would suggest is, if you're doing this approach of top down and hitting up sectors, is what lists do you use? Like if I can go here and I can go by industry, okay? I can go by industry down here, and I can go to healthcare or financials. Where's financials? Financials, and click on select all financials. But there's a problem. The problem is when I pull up this financials list, first of all, there's a bazillion stocks in the list. Okay, there's a bazillion stocks, and a lot of those are penny stocks. Like I just don't have any interest on these. Now we're talking about trading stocks today. If you're trading options, you really want to emphasize liquidity. But even with stocks, a lot of traders want to avoid penny stocks. So what I would suggest is this: make use of your Thinkorswim desktop software and do something similar to what I've done. And that is create a watch list. Create a watch list. And so this is going to be my personal watch list of a more limited list of financials and healthcare and industrials. Now you're going, that's going to take forever. It's not going to take forever. Let me just pull up financials here real quick. Okay. So these are just financial companies that are in the S&P 500. Okay. So I've cut the list down by 90% probably by just using S&P 500. How do you create the list? Here's how you create the list. You go to the Analyze, you go to the Scan tab, okay? Go to Stock Hacker. Let me just shrink this down here so you can see the whole thing. And let me go, and I'm just going to remove all my filters here. You scan in S&P 500. Okay, it just gives you the choice. You can go to public, S&P 500, or S&P 100, or whatever list you want. Intersect with, by industry, IT, okay, for the IT list. You can scan it. What's it going to do? It's going to give you S&P 500 stocks that are in the IT sector. That's it. That's what it does. And then what you do is you just save it. And then after you click save, okay, it's going to be a watch list that you can refer back to in the future. And then what you do is you just go back here and you just say, oh, I'm going to just change this to healthcare. Select all healthcare. I'm going to save it again, different name, S&P 500 healthcare. And you repeat the process 11 times. It's going to take you 5 minutes to do all 11 because it's as easy as just clicking, saving, changing the industry group, clicking, saving. Once you save it and you pull it up, then once you go to your personal watch lists, you can see I've done that here. I can just pull this up and I can go, hey, you know what? I'm going to look at financials. Here's financials. This has been a stronger list there. Okay. And then what I can do is then in my process of top-down analysis, I've already identified the sector I want. Health, financials has been strong. And then I can go and I can sort this by however I want to do it. I can sort it by 1 month change, or I can sort it by, the relative strength, whatever. And then I can find those stocks that are of interest to me here on this. Now, one thing I would just point out on this is, as I'm looking at this, we're in earnings season right now. Okay, so a lot of these companies, as I look at them, right, I'm going to have earnings on this. Earnings. That's what these little symbols can give us a little clue on. Okay? A little blue circle, little red circle tell me earnings are coming up. So if I want to avoid earnings, you don't have to, but if I want to avoid earnings, what I can do is I can then look for the ones that don't necessarily have that. Okay. Let's click on BNY. All right. So here's BNY. There's different types of trading I can then do, but we've started with the approach of, hey, this stock is obviously trending well. Let me go back to my moving average. Here's my 10-day SMA, my 10-day EMA, excuse me, my 30-day SMA. Or maybe you're using a 20 and 50. It doesn't matter, okay? Be consistent in what you're doing. But what we're going to see here is we're going to see a stock that's trending up. And then I'm open for a trend trade here, okay? And keep in mind, if I'm doing a trend trade, typically with trend trades, I'm just going to say as long as the stock keeps trending up, I'm going to stick with the trade. Sometimes in these webcasts and sometimes with these trades, and I'll try and demonstrate one later, we'll set a target price. And we'll say, if we hit here, we're going to get out of this trade. But if we're doing a trend trade, you know what? If I set a target back here and we got out, look, I mean, the stock's still trending up. I want to stick with it. So I'm going to keep that approach. I'm going to say, I've got some support about here. Why did I pick here? Why did I pick right there to draw a spoiler? Well, we gapped up there. That's a low price we hit there. In fact, like if I were to zoom in, let's zoom in, and I were to look at the lows over the past few days, so then, that's kind of the low we hit, which is pretty close to our moving average, but that's not the key issue. The key issue is we gapped up to there. Okay. And so now if I'm going to set a stop loss, I'm going to put my stop loss under here. Okay. And remember, stop losses don't guarantee to get us out wherever we set that stop loss, but hey, it's probably an important consideration, at least in terms of your risk management on this. So I'm looking to get in. We're up about 1% today. So we got a little bounce. It looks like the support is holding. Support is holding. Should I be concerned about a dividend here? That's a common question. You know, when the stock releases, when the stock sets a dividend, okay, this is the dividend X date. When it has a dividend, the stock's going to drop, everything else being equal, by about the amount of the dividend on that day. Okay. This pays a pretty decent dividend, 63 cents. But a 63-cent drop isn't that much. It's probably not enough to totally deter the trade. I mean, we're up $1.50 today on this. So 63 cents isn't that big a deal on that. So I'm not going to worry about the dividend. This is maybe the bigger concern, earnings. You can still trade on earnings, but it's probably more on your radar. So we're going to set a stop. Now, how am I going to do the stop? I'm going to go below the stop. Now, there's different below the support level. This is my support level, and my stop is going to be down here. How far below? Very often, this isn't a suggestion necessarily. This is just kind of an average. A lot of people will go about 3% below support on this. Okay. So if my support is around, 156, and I go 3% below that, 156 times 0.97, I'm just using my calculator here, I come up with about 151.30. That's going to put my stop loss down here on that. Let me just close out of that. 151.30. Let me just jot that down so I don't forget. And I'm going to enter right now on the trade. Okay? Market's open. If I wanted to say, I only want to get in at a higher price, we could do that. We could do a buy stop. But in this case, I'm fine getting in now. I'm going to right click on the chart. Buy custom. I'm not doing an OCO bracket. I'm not setting a target. I'm not setting a target because it's a trend trade. As long as it's trending up, I'm not going to get out at a target price. I'm going to click on stop. All right. I'm going to click on stop. Let me go over here. I'm going to, now, it comes in as a market price. Could you do a limit? It comes in as a limit. Could you do a market? If the market's open and it's a liquid stock, I have no qualms in doing a market order there on that. If the market is closed, then there's just more uncertainty as to what level you're going to get filled at here. But I could do a limit price, and it doesn't probably matter. I mean, here's the limit it's coming in at, 150, 138. So that should fill right away on that. But my stop, we said 151.30. That's my stop. And that's going to be good till canceled. Stops don't guarantee we're going to get out right there, but it's there to protect us. Figure out your position size. 100 shares at $158 a share. That's $15,000. You don't have to do 100 shares. You can always do some increment of that. Just figure out how much you're risking. When you click on this and click on confirm and send, and it pulls it up, it'll tell you what's my cost of the trade. Well, technically I could lose everything on this, right? It's no guarantee of getting out of the stop, but that's how we do that. And I'm just going to put this in my stock bucket there. Okay. So there we go. We filled, we're in there. Now let's hit up some questions there. Question was, what's this? This little 24 means there's 24-hour trading on this. Okay. On Schwab, 24-hour trading. That's what that little symbol is. I think that's what you're asking there. Okay. So that's that. And the little green, that's a dividend being released. All right. So that's the first trade. Let's look at another trade. Let's go out and I'll stick with financials here for a sec. And I want to pull up another one because I want to give you a different example of a type of trade that we can do. We're in the financial sector. Again, top-down analysis. That's how things are going. That's great. But sometimes you may decide, I want to set a target price. Maybe you don't want to get in right away either. On the last stock we were looking at something that was up today. It was doing well today. Here we're actually pulling down. But if you look back on this stock, look, we went up and we pulled back. Okay. That's a flag pattern. Okay. Looks kind of like an F, right? That's a flag pattern. Or think of what Marines at Iwo Jima. You know, the flag is off, you know, kind of angled like that. Okay. You can, if you want to visualize it, that's one way to do it. You have the flag pole. Here's the flag pole. Here's the flag. Right? Here's the flag pole. Here's the flag. Here's the flag pole. Here's the flag. Okay. Now, we're waiting for a new flag pole. Hasn't happened yet. Stock's down here. What are we looking for? We're looking for it to break above, well, the upper portion of the flag. If you take this flag and look at it over here, okay? So our entry is typically going to be breaking above the flag. That's one way to consider the entry. The other way to consider the entry is you could say, well, I'm not going to, my line can be a little bit inconsistent there. I'm going to look for it to break above the high here. Well, that's actually today's high. I don't know if it's going to fit today, if we're going to go up above that today, but maybe it's tomorrow. So I'm not going to necessarily say it's got to be today. But if I put my cursor, let me zoom in here. Okay. If I put my cursor on the candle, I can look at today's high. I'm looking just right over here where this H is. Okay. So where that H is, 57.59. Let me jot that down. 57.59 is the high. I'm going to look for an entry above that. Okay. So that's going to be my entry. So I'm not going to enter right now. I'm going to enter on the bounce with the expectation that what it did before, in other words, in the past when we had this kind of flag situation, we broke out. Flag situation, we broke out. We broke out. Are we going to break? I don't know if we're going to break out, but we're kind of saying the past is our indication of what's going to happen. Does that always happen? No, that doesn't always happen. That, by the way, is pretty much all of technical analysis, everybody. When you think about technical analysis and you talk about, you know, the main things, people talk, well, the trend. Well, the theory is if it's been trending, it's going to continue to trend up. The past is going to indicate what the future is going to do. When we talk about a support level, okay, when we talk about a support level or a resistance level, we say, well, in the past, there's no P in resistance, in a resistance level, in the past, okay, in the past, it's bounced off a particular level, either above it or below where it's at. So our expectation is that it's going to do what it's done in the past. That's technical analysis, right? But there's just no guarantees it's going to do that. So we're going to look to get in. How are we going to look to get in? Josh said buy stop. Yeah, we're going to use a buy stop to get in. We're going to look to get in here, okay, where I just drew that X. That's going to be our buy stop. Now, where are we going to get out? Well, I'm going to do similar to what we did before. Now, look, we're only getting in if the stock goes up. So I'm kind of making a pretend candle here, a bounce. That should be green, I guess. But um, if we do get that bounce, then I'm going to consider this a support level. Okay. What's this? Around 56. Okay. I'm going to do the same thing. I'm going to go about 3% below that. 56 times 0.97 gives me 54.30. 54.30, that's going to be my stop. Okay. Now, am I going to do a target? Yeah, I'm going to do a target here. I'm going to do a target, and there's different targets you can do. The traditional target on the flag is to take the length of the previous flagpole, that, and say that's how far it's going to go up this time. Now, some people will say, I'm going to add this, take this length, and add it to the bottom here. Okay. Some people will say, I'm going to take that length and I'm going to add it to the breakout point. There's not a right or wrong there. One's a little bit more conservative. And that's what we're going to do. I'm going to take this, I'm going to take that length, and I'm just going to right click on this, and I'm going to duplicate it, and I'm going to move this, and I'm just going to do this. Okay? And now when I look at this, I'm going to go up here. 60.6 is my target. 60.6. 60.60 is my target. Okay. Just to recap. We're only getting in this trade if we bounce above here. We're going to put a stop in at 54.30, around here. Okay. We're going to put a target in up there. How do we do that trade? This is how we do the trade. We're going to right click on the chart. We're going to do buy custom with OCO bracket. Buy custom with OCO bracket. Again, figure out the amount you're willing to spend. On the buy order, 100 shares times 50, that'd be 5,800 bucks. Okay, that's about what we're good with here. Okay, I'm not going to do a limit order though. I'm going to do a buy stop. Okay, you just click on stop. Okay, so but you don't click on buy stop because it's already a buy order over here. I'm going to make it good till canceled because I want this to be available to buy beyond today. By today, the markets are going to close in about 5 hours. Okay, less than 5 hours. And so I want this to be available tomorrow. But this is a buy stop if the stock goes above 57.60. 57.60. 57.60. Now, sometimes I get the question, and people say, why would I ever want to buy at a higher price than where the stock currently is? Okay. Why would I want to buy the stock at a price higher than the stock currently is? Well, the answer is because we're waiting for a change in the momentum of the stock. It's been going down. We want it to be going up. This is a way of doing it. All right. Now, I have a target price. Target's going to be limit. Again, it's going to be good till canceled. All these are going to be good till canceled. Good till canceled, good till canceled. My target price is going to be, I jotted it down, 60.60. 60.60. My stop price, again, good till canceled. My stop price is going to be 54.30. 54.30. Okay. There you go. That's the trade right there. And I'm going to confirm and send, and I'm just going to put that again in my stock portfolio there. All right. Okay, so that's an example of two kind of bullish trades. One, just a straight trend trade. This is more of a swing trade. This is contingent upon the bounce though. All right. So let's look at another. Let's change our group here. We said financials was one group that we could look at. We could look at energy. Let me go to my energy list here. Let me go to energy, doing the same thing, looking at it this way. Now we have individual stocks here. Now, one thing to realize with energy is what we talked about before. The energy sector right now is going to be very dependent on crude oil. And not just crude oil. I mean, the reality is if I look at, say, heating oil, is it doing the, this is a proxy for other products like jet fuel. Energy prices are going up. All right. Let me go to crude oil though. What's going to affect this? Well, we can do a technical analysis on this and say, hey, we have a nice trend, but the reality is a lot of this is just going to be dependent upon what goes on in the Gulf, right? What's going to go on in the Gulf? I don't know. You guys know as well as I do. I'm not sure. But so these prices are going to be dependent largely on that. Okay. Question on the last trade. Why not use a buy stop limit versus a buy stop? Okay. It could gap up. You can do that. I have no problem with that. So just to make sure everybody understands, on our last trade, we said if the stock goes up, once it hits that level, we want to get in. And so that's a stop price. What Josh is saying is, hey, you can also put in a limit price at a higher price. I realize this is a different stock here, but we could also put a limit price just in case it gaps up too much. Then I'm going to limit it. I'm going to limit it out and just say I'm not interested in that stock anymore if it gaps up too far. So fair or not. Fair enough. You do it either way. I don't have a strong opinion on that. I think it could work either way. Okay. So let's go and let's just look. Now, here's the thing. We kind of have the double whammy with these energy stocks. Number one, as I just mentioned, they're going to be dependent upon what the price of oil is, probably. Number two, let's look at the earnings situation on these. There we go. Remember, when you have the blue circle and the red circle, the blue symbol and the red symbol, that means we have earnings coming up. Let's find the one that doesn't have earnings coming up. There's none, right? Everything has earnings coming up. So it's not a it's just extra, there's just extra uncertainty. Now, the reality is, we'll just look at, say, ConocoPhillips here, okay? The reality is, when we're looking at this, and we're saying, well, maybe we're breaking out here on this. We had a 20-day, this is the 10-day EMA crossing above the 30-day. Some people use that as an entry signal. We're above both of them. We have, if we look shorter term, you'll see we have higher highs, higher lows, kind of the same thing. But so we have some variability with earnings, but the reality is most of these companies, these oil companies right now aren't trading off of earnings, okay? Or to the extent beyond the fact that their earnings are being driven by oil prices, right? We can say, how efficient is ConocoPhillips? All right, how efficient is ConocoPhillips? it turning profits? Well, right now it's really 90% of it seems to be oil prices. So may or may not be as big an issue. Okay. All right. So let's do that. Okay. So let me go here and let's take a look at this. Let me zoom back out. And I'm going to look for an entry. Again, the difference between this one and the one where we did the buy stop on is this one we're bouncing up today. When it was going down and we wanted to see the bounce, we were waiting to get in. This one, we don't have to wait to get in. Our shorter term trend is strong and we have upward momentum. I'm going to do the same thing. I'm going to find a support level. I'm going to call this as a support level, okay? Right about there, roughly there, okay? We bounced off it back there. It kind of got to it and then gapped down below it. Bounced off it, went up, gapped above it, and using this as a support. Here's my support level. I'm going to do the same thing. I'm going to go 3% below this. 114 times 0.97. I come up with 110.50, okay? 110.50 is going to be my stop level on that. So in this case, I'm going to do a trend trade again. I'm not doing a swing trade. If I wanted to do a swing trade and I was looking for a target price, what target price would I consider? Well, I'll tell you one target may be this. This would possibly be a target. Apologize, my line may be a little not the straightest line there in the world. I think that would possibly be a target. But on my swing trade, excuse me, on my trend trade, I'm not even going to pick the target. I'm going to put in the stop. And I'm going to get in right now. So therefore, I'm just going to right click on the chart. I'm going to buy custom with the stop. And there's our limit order. There's to buy. There's our stop order to sell. And we said 110.50. 110.50. Make that good till canceled. Confirm and send. Put that in our stock group. Just make sure. That's 11,700. Well, that's a little bit more than I want to spend. So therefore, what I can do is I can go back and say, I only want to spend half that. Around 6,000 is the most I want to spend. So I can change my quantity on that right there. Just make sure they both match. Confirm and send. And then I can send that order. Okay. So we got the order in. Hasn't filled yet. We'll see. If I want to, by the way, adjust that and make sure it fills, I can always just move this. Just kind of drag it up a little bit and then send that, and then it fills. And then we got that order filled. Okay. All right, everybody. Hey, thanks for joining me today. Thank you, Ben, for jumping in on the chat there. And Scott, who's not there anymore, but for starting out in the chat. Thank you, each of you, for joining me today. James should be back next week. But in the meantime, coming up next, we got Getting Started with Options. Let me point out something. Later today, we have Getting Started with Technical Analysis. Ben Watson is teaching that webcast. Make sure you check that webcast out. You can follow Ben on X at Ben Watson CS. You can follow me on X at Brent Moores CS. And make sure you subscribe to that channel, that Trader Talks channel. That way you don't miss future stuff. And you do us a favor. If you like this webcast today, hit the thumbs up. I'd appreciate it. And everybody, have a great rest of the day. Bye-bye, everybody.